Hey guys, this is Shane Stevens with Remax Heritage, your Director of Development. On this video, we're going to talk about the residential real estate contract. This is how I explain it to my clients, and hopefully this helps. All right, so this is a bigger document. This is the biggest document, probably 16 pages. So this does take some time to get through, but it's so vitally important that you make sure your clients know what they're signing, and that you just, explain it to them. And so when filling it out, obviously, if you're representing the seller, you'll have their information. If not, it'll be on the disclosure, usually on the supplements on the MLS. You can look up their names and their marital status. So sellers' names and marital status again, and then marital status. So either ASP for a single person or AMC for a married couple. And then same with buyers. But guys, the biggest thing is we're going against some agents that take don't even take the time to explain this stuff. So this is a way to set yourself apart. So again, ASP means a single person, or AMC for a married couple. You're going to scroll down here. Property address is right here. There is a box you can click if it's a Banco property, but you're going to put in the street address. Don't forget to put in the county. Legal description. With the county, you can ask our title company and they can pull that for you. That's typically what happens. I always say everything at the bottom of page one automatically stays with the house, so they can't go ripping down bathroom towel holders or ceiling fans. The only thing that's in here, in my opinion, that sometimes gets disclosed as not staying is like curtains and window blinds. Most of the time, sometimes mounted entertainment brackets, like the brackets to mount their TV on. But I always tell my clients those aren't even that expensive. And if you take down a TV mount, you have to fill the holes and repaint. So I skip down to additional inclusion. So an inclusion would be if it's something that your buyer wants to ask them to leave, the seller to leave. So like a pool table or a TV, you put it in here. So say it's a pool table to stay with the home at no value to the transaction. That's the way it's got to be worded if you ask for stuff. And again, this is only if it's not already disclosed as staying. If it's already marked in the disclosure as operating and staying or staying in general, then you don't need to put that in here. It's going to stay. This is in the event that the buyer sees something they want to ask the seller to leave that's not already in writing. An exclusion would be, say there's a really nasty fridge in the garage that is marked as staying with the house, but you don't want it. Like the buyer doesn't want it. Hypothetically, we're talking about this gross fridge. You can write in here fridge, refrigerator in garage to be removed from the property prior to closing. And it doesn't have to be a fridge. That's just an example. But anything that is listed as staying with the house that you do not want them to leave at the house. So make sure you put that in writing. Additional terms can be anything. This is just something that is not covered in the 16-page document they need to add. Sometimes it's I've had times where I'll have an investor with an agent in our office say that they're willing to pay the buyer's agent's commission and the title fees. So they put that in there. I've had times where I have a client that has an offer accepted on a house contingent upon selling theirs, that I put in here inspection period to start once buyer's current home is under contract. But that, not trying to confuse you, but those are just the type of things. Next section is warranty. So if you're not going to ask for a warranty for your buyer, you click that box. So, but if you are going to ask for a warranty, for instance, like me, I use Cinch Home Warranty. So I know that their warranty that I asked for is $697. So this is the cost of the warranty. I usually ask the seller to pay for it. And then I put the warranty company information in here, which is Cinch Home Warranty. And with that plan, I can already tell you it's $100. That's the $100 deductible. So the plan is $697, but whenever my client, this is what I say, whenever you file a claim, it'll cost you $100 to get to have them send somebody out, but that's a lot less than a four, five thousand, $2,000 repair right after you move in. And then for that, I always mark licensee assisting buyer will be responsible for making arrangements for the home warranty. So for setting up the plan to make sure it's done. Everything checked yes here at the bottom are just the forms that are involved with the transaction. So sales disclosure, lead-based paint would be if the house was built in or before 1978. Contingency, if your client is writing an offer contingent upon them selling a house that's either lined up to close or if they need to sell or close on a house, that that box needs to be checked. And I always add Remax Heritage franchise disclosure because you're always going to send a copy of our franchise to get signed by the other side. But essentially, this is just all the forms that are involved in the offer that you're sending. You can also put things like in its present condition addendum. You can put cold weather inspection waiver. It's just any of the forms involved need to be written out here with a check box. Top of page 3, the effective date will be the date of final acceptance, where I always say whenever both the buyer and the seller have signed everything, that's the effective date, whatever date that is. Seller's disclosure status. This is where the seller's confirming that they answered all the questions in the seller's disclosure to the best of their knowledge, and they were honest on that form, and that they're by law required to be honest and disclose any issues. Entire agreement and manner of modifications. This contract and all attachments constitute the complete agreement of the parties concerning the property. Supersede all previous agreements and may be modified as signed only by a written agreement signed by all parties. So the way you can change something on this contract or correct something is with an amendment signed by all parties. Parties meaning buyer and seller. Parties in this, again, buyer and seller. Right here is where you would check if any of them are a licensed real estate professional, like if they have their real estate license. If they're in Missouri, you check that box, or Kansas, if the seller is, or if the buyer is licensed in Missouri or Kansas, you check that box. Or if you're an immediate family member of your client. So say you're selling your brother's house, you'd have to check this and that. Say you're helping your brother buy the house, you check that. And then same when it comes to the buyer, So notices, so these are the ways we can send like notices. United States Postal Service, email, time is of the essence. So as I go through this form, I always tell people, everything's on a timeline. So from the time we go under contract, tomorrow is day one. The day after so say you go under contract today, tomorrow is day one of the 10-day inspection period, usually, in the 5 days to turn your earnest money. Everything has to be done in a timely manner. So if I send you something to sign, please sign it at your earliest convenience. Electronic transaction. This is legally allowing me to get stuff signed electronically during this transaction. Cyber awareness. You've heard this in my other videos, but you guys have to really belabor this point that nobody's going to be reaching out to the buyer to wire them any money. Nobody. They're not going to get an email. They're not going to get a text. They're not going to get a call. Nobody's going to be reaching out to them to wire any money for the buyer. Absolutely not. At closing, the lender will tell them what amount to bring if they're doing a loan, what amount to bring for their down payment, and they'll get a cashier's check from their bank and certified funds for that amount. Or if they are wiring their down payment, the title company, I will literally stay in the room and have the title company tell them the wiring instructions, or I will relay that information to ensure it's done correctly. Because there's been times where literally the scammers get good enough to where, so I use Christina with EverTitle in our office. They'll call and say, this is Christina with EverTitle, but it's not actually Christina. That's how good they're getting. So just belabor the point that, and then for sellers, you're not going to be wiring any money because you're going to be the one receiving money at closing. So nobody's going to reach out to you to wire any money. At closing, they're going to have a form that you'll fill out with your wiring and your bank account information. Literally with me and Christina, the closer at the table, you'll fill out that form, or they can give you a physical check. So just belabor that point. It's a very important point. Page 4, this is what I say, this is kind of the meat and potatoes. So item 4, the purchase price. and then skip down to earnest money. I always ask for 5 days to turn in earnest money. If you just leave it blank, then it's going to be 3 days. I get busy sometimes, so I need 5 days, and it's calendar days. It's not that includes the weekend. So if you go under contract on a Wednesday, you got to get it turned in by Monday because it's calendar days. It's not just business days. And then earnest money, you'll put your amount. So say we're offering 250,000. We're asking for 5 days to turn in our earnest money. We're gonna put $1,000 down for earnest money, and your buyer's okay with it. You can either usually do a physical check, or you can even do like you can pause it online. But we'll check that. I always ask for it to be refundable, and I'm just gonna put Ever Title Agency on here because this is where the title company's information goes. So the amount usually additional nobody usually really does additional earnest money. I know we don't. Total amount financed by buyer. So this is the amount financed is the purchase price minus the down payment, whatever's left over. So say we're going to keep it simple. So say they're doing 3.5% down, they're doing an FHA loan just for simplicity. So we are going to get on our calculator, and so just so you can see 250,000. I always do times or times 0.035. So 8750 is what they're putting down. Before I click off this, I just go minus 250,000. So 241,250 is the amount that's going to go in here. 241,250. And then after you click this, it'll populate that. And I know you saw 8750, but the reason it's 7750 instead of that is because of the $1,000 earnest money. So the uh the financed amount is basically again the purchase price minus the down payment. And then the finance amount is the purchase price minus the down payment / earnest money. So whatever's left that they still need to bring. This is where you're going to ask for your commission if you're on the buy side, if you're filling out this form, which I'm assuming you're watching this video if you're filling this form out. So again, we're going to get on here 250,000, right? I'm always going to try to get 3%. I'm always going to ask for that. So point times 0.03, 7,500. That's 3% is what we're going to pursue.
Okay.
So say your buyer needs some closing costs paid. The lender tells you they need they're going to have $5,000 in closing costs. If they want to ask for that, they can ask for that. So say hypothetically for this argument, they're asking for closing costs. Well, this is where you're going to put that. Okay. You're going to skip down, and then it's automatically going to add that together for you for your total additional seller's expenses. Next item is G, typical loan cost. Loans have cost. Every loan has cost. Private mortgage insurance. So PMI is typically included unless you're doing conventional and you've paid off 20% of your loan. So if somebody's putting 20% down, they're going to avoid that. Or if they put 10% down, whenever they have paid off 20% of their loan, it should fall off. FHA insurance for FHA loans, VA funding fee for VA, USDA funding fee for USDA, and then flood insurance for any home that requires flood insurance, which your lender will know. And usually we have to put on the listing if it's yes, it's in a floodplain, no, it's not in a floodplain, or if it's unknown. But closing and possession. So this is where you're putting your closing date. So for FH, say we're going to have a 35-day closing. It's the 5th. We'll just say the 11th. I don't like closing on Fridays because they're trying to get stuff done before the weekend. It's kind of tough. So it's nice to close in the Tuesday through Thursday range, honestly. And then you can put on here when you want possession. So you're closing March 11th. We'll say we're going to try to get possession the same day at 5 o'clock. But this is where you're going to put either a date and time, or you can just put funding, which funding is in layman's terms means whenever the seller gets their money. Appraisal value contingency. So if this is a cash sale, say we're already saying this one's a FHA loan. So I always put NA if it's any type of loan, FHA, USDA, VA, conventional. I'm putting an NA here because again, I don't like leaving stuff blank. And then 5 days there. So this right here is the buyer and seller will have 5 days. So say we're at 250, right? And it comes in under 250,000, the appraised value. Even if it comes in at 249, we have to give a copy of the appraisal to the other side. So to the seller's agent, I would have to provide them a copy, and then we'd have 5 days to renegotiate how to get to that appraised price. The only way, so say it appraised for 245 and our price was 250. The only way to still pay 250, still have the buyer pay 250 is that if they bring an additional $5,000 to make up that gap. Otherwise, we're going to have to renegotiate to get to that 245 number. Skipping down to to line 7 or paragraph 7, sale contingency. So if they don't have to sell a house or close on a house to buy yours or to buy this one, that's the box you check. If you're writing an offer and your client has another home that they need to sell or close on that's under contract already, you're going to click this one. Is contingent. So for this one, we'll just say not. And if they're not using a loan, they're paying cash. It's a cash sale right here. If on this one we're saying it's an FHA loan, we're going to do finance sale because any loan is a finance sale. Cash is cash. Any loan is finance sale. Skipping down to here, if it's an owner occupied loan, so an FHA loan, they're buying the house to live in it. That's the box you check. If they're buying the house to as an investment property that they're not going to live in, you're going to use that one. So on this one, you choose whatever type of loan it is, conventional, FHA, VA, USDA. Again, we're going with FHA on this just out of simplicity. FHA, so we're going to check this box next to FHA. I'll also say for this example, we're going to go owner occupied. With FHA loan, it's most likely going to be a fixed rate. Almost always is. It will with FHA it is. Typically, it's a 30-year loan. I mean, if it's a 15-year loan, you put 15 here, but most of the time it's going to be 30 years. And LTV is the percent that they're financing. So remember, they're putting 3.5% down, so they're financing 96.5% of the loan. That's what LTV is, okay? Primary loan, I always check the second box because if they're buying a house to live in it, it's going to be the primary loan, and they're going to lock the rate between the time you go under contract and closing. And so I always say the prevailing rate of closing because they may have a rate locked, but whatever the rate is at closing is the rate you're going to use. And if it's a secondary loan, a lot of times it's literally just an investment property or whatever. Here's where we're going to put your information, right? So I'm going to put John Garris, Flat Branch Home Loans, for the sake of the argument, because John's in our office and we like John. So but whoever your lender is, you put their name and then their bank name. Skipping down to here is if they're not approved. Again, guys, if they're not pre-approved, you don't need to be writing an offer for them because anybody who's representing that seller is not going to consider an offer when they're not even pre-approved. So don't waste your time. Lender appraisal requirements. Sometimes people will put a figure in here because sometimes after like FHA or VA or a USDA appraisal, the appraiser will make them fix things. So like VA loans, they might call out that there's not a GFCI outlet in a bathroom because they require a GFCI outlet within 6 feet of a water source. Or if it's an FHA loan like this one, and they're missing a handrail. But regardless, a lot of times people will put something in here. I don't really put something in here, but sometimes people will put money in here saying the seller will be responsible for any repairs up to this amount. So we can say $1,000 just in case there's any FHA repairs, just as an example. So between the time we go under contract and closing, the seller is going to keep utilities on. They're going to keep maintenance of the property, and they're going to keep it insured. We can never have a time where that house is not insured, guys. So even if you're on the sell side where you represent the seller, don't have them cancel that sucker, that the insurance on it until it closes. Survey. So stake surveys are typically done on houses with acreage or land sales. Most of the houses that are like in the city, people don't do a stake survey on it because it's pretty easy to tell where the boundary lines are. But if you're selling a house on acreage, say there's 10 acres, you want to know where those boundary lines are. And so, but a lot of times you can put 10, it'll be 10 days if you leave this blank. But if I put a house under contract with land and there's not a survey in place, I'd probably put like 20 to 25 because stake survey people take their time. So here's where you're going to ask for time to do an inspection. Most of the time, it's going to be 10 days. Sometimes people ask for 7 on a counter, but I always put 10 in here to start. And during that 10 days, you want to make sure that house is insurable. Factors affecting inspections. Basically, a buyer's understanding that an inspector can only see what they can see. They can't look behind walls. The seller is going to let you guys have access to the property for re-inspections, damages and repairs. I always use the example that if we were walking through during an inspection and you, Mr. Buyer, tripped and made a hole in the wall, you'd be responsible for fixing that hole in the wall. Any damage caused by the buyer during the inspection period or as the result of the inspection, the buyer was going to be responsible to fix. And as long as the house isn't sold as is, sometimes you can negotiate repairs. And here's where it's basically saying if the seller agrees to any corrective measures which seller performs pursuant to the contract, they're going to be done in a good workmanlike manner with good material. So they can't just slap a band-aid on there. They're having it done correctly. Wood destroying insects, so termites. So if there's a termite inspection done by the buyer and they find termites and say it needs to be treated for termites, then the seller's going to have to agree to get that property treated prior to closing. What if the buyer does not conduct inspections? If the buyer decides I'm not going to do inspections, then they are waiving any right to renegotiate anything. They're waiving the right to ask for repairs. They're waiving the right to ask for a price reduction. Any of that. You have to have an inspection done to be able to negotiate. What is an unacceptable condition? An unacceptable condition is any of the items in the inspection report itemized out. So it has to be in writing in that report. What if buyer does not give timely notice of unacceptable conditions? So we did a 10-day inspection period, right? So we have to submit our inspection notice, which is the form, which is basically stating you have 3 options after the inspection, right here. You can either accept the property in its present condition, you can cancel the contract if the inspection doesn't go good. You can offer to renegotiate. So if you offer to renegotiate and you have to turn in the form that's called the resolution of unacceptable conditions is the form where you list out the repairs you're asking them to address. Or you even could, if you don't ask for repairs, you can still ask for a credit towards the closing cost or price reduction. But any negotiating you're wanting to do after inspection has to be on that resolution form, and you have to turn it in within that 10-day inspection window. Because if you don't, then you're basically losing any right to negotiate anything. So these are the 3 options. They can say, yeah, inspection went well, I'm going to accept the property in its present condition. They can cancel the contract. And if they cancel the contract and you've already turned in the earnest money, you can get the earnest money back. Okay. And then going down to the next page. So again, guys, the resolution of unacceptable conditions is the name of the form that you put the list of requested repairs on there. Or if you're asking for a credit towards the closing cost, or if you're asking for a price reduction, it's the form where you list what you're trying to ask for to start the negotiation following inspections. Item 14, defaults and remedies. If the seller defaults on the sale, the buyer can do this. If the buyer defaults on the sale, the seller may do this. Sometimes I read this, sometimes I have them read this. Dispute resolution. So if there is something that the buyer asked for to be addressed that's just ridiculous, you could technically dispute the resolution. I've never heard of this happening. I've never had it happen. So most of the time people, ask for reasonable things. Additional disclosures, including those mandated by state or federal law. Item 16, radon, microbials, and other environmental pollutants. You can have a radon test done, and they leave a radon tester. It's like a little black box in the basement for 72 hours, 3 days. And after that, they have a report that they come back with if you pay to have a radon test done. And if it's over 4.0, the level is 4.0, where they want it to be below 4.0 on average for that 72 hours. If it's over that, then radon's been known to cause severe health issues. If it's in a house, if you're in a house with high radon for a long time, it can cause health issues. So if that's the case, then sometimes, say I had a buyer and they did a radon test and it came back high, I could try to negotiate that they seller install a radon mitigation system, which is a system that keeps the levels at or below 4.0 on average. These are 2 sites you can go to, EPA and Kansas radon. I mean, you can go to either of those. Missouri, you would go to this site to find out more information on radon. Microbials and other environmental pollutants. So these are just environmental that mold, fungus, bacteria, and other microbials commonly exist in homes. And so you can even have a mold test done, but a lot of people don't. Lead-based paint disclosure. If the house was built in 1978 or before, then you're required to do a lead-based paint disclosure form on the property, where basically the seller like discloses if they know of any lead-based paint. But I'm going to do a separate video just on that form. Criminal offenders. So you can go to this site to see if any of your neighbors are on the Kansas criminal offenders list, or for Missouri, you can look on this site. Franchise disclosure, I've done another separate video on that, explaining that. Well, we are independently owned and operated. We are a franchise of Remax. Brokerage relationship disclosure, I've done a separate video on for that as well. But unless you're David here, you're going to be a designated agent for our office on the sell, or whether you're representing the seller or the buyer, you're a designated agent because the broker designates you to be your agent. And I always click both boxes, right? Because there's the $395 admin commission for your buyer. So if they're buying a house, unless they're a VA buyer, that's the only way that they don't have to pay the $395 if they're a VA buyer. But if they're any other type of buyer, like FHA, conventional, USDA, cash, they're going to be required to pay a $395 broker administration commission. So I always check buyer for that reason. The seller is typically going to pay out the commission. And we're on the buy side. So you're going to sign here, and your buyer, if there's one of them, will sign there. If they're a married couple, they'll sign both. One will sign one will sign the other. Earnest money and additional deposits. So again, we have 5 days to turn that earnest money check, right? And it needs to be a check made out to the title company that's listed on the listing that you're writing an offer on. And so if it was ever title agency like our office, you'd write that on the check. But whatever title company the seller's using, you have to write a check, make the check out to that. After you turn in, the title company does deposit that check. Make sure the clients know that they will cash that check. And cancellation of the contract. So again, you do inspections, you'll have the option to get that earnest money back, unless you wrote in its present condition addendum where you put no cancellation. Like, because I'll do a separate video on its present condition addendum, but most of the time, if you do an inspection and it's bad, you cancel. If you have cancellation rights still, you can get your earnest money back. Say the appraisal came in, like we mentioned, we were at 250, came in at 245, and we couldn't reach an agreement on how to get to 245 and move forward. If we can't reach an agreement on that, you can get it back. The earnest money really becomes in jeopardy if you get close to closing and you cancel with no grounds to cancel, no reasoning, no contractual reason to cancel. The seller can argue to keep that because you tied up the property for a little while. Taxes, prorations, and special assessments. All general, state, county, school, and municipal real estate taxes, homeowners association dues. These are just other things that are affiliated with real estate property. Evidence of a title. So after we get an accepted offer on this house, this is what I say. After we get an accepted offer on this house or another house, we're going to send a copy of the signed contract to our title company, and they're going to run a thorough title search to make sure there's no liens or back taxes, to make sure that the title is clear and secure for you. And the seller pays for the title policy. Expiration. As a courtesy, I always try to give the other agent at least 24 hours. So I always would write in here the next day. Today's the 5th. We'll say the 6th at 6 p.m. But if you leave this section blank, then this contract's good for 5 days. 5 days if left blank. Then your buyer's going to sign. Don't be an agent who's lazy. It doesn't take long to fill out both agents' information. Sometimes a buyer will be lazy. They'll fill out their information, but they'll leave the seller's information, agent's information blank. Take the time, take the extra 2 minutes to fill out the seller's agent's information, because it's just a common courtesy. And if you fill out this form, then you need to sign this because you're the one who filled out this form. So I know that was a lot of information, guys. As always, if you ever need me, I'll do my best to try to answer. But I want to have these videos made for every single form, so that way if you're in a pinch, you know how to explain it and you know how to fill it out. So as always, thanks for watching, and I'm here for you if you need me. 816-263-2836. Have a great day.